Finally, some movement in the currency market with the euro breaking up through important 115 multi-week range resistance. We believe this sets the stage for the start to a bigger run on the US dollar, and all of this coincides with the Federal Reserve that is reconsidering its stance now in less of a rush to be raising rates. This was highlighted in Wednesday's Fed minutes, which triggered the important technical breakout in the euro. While this is exactly what investors wanted to see, stocks weren't able to respond with that same enthusiasm to more accommodative leadings as they once did, and this is something we have warned about for many months now, with the Fed no longer able to dip back into the type of unprecedented accommodation we had seen in the near decade post-2008 financial markets crisis. We wouldn't rule out another run higher in the sessions ahead in U.S. equities, but we believe rallies will continue to be well capped and continue to expect stocks to unwind from a super extended record-setting run as the lag effect of previous rate hikes still works through the system. But for currencies, given that we have a yield differential moving back out of the US dollar's favor, coupled with US specific risk associated with the government impasse and soft dollar protectionist policy, all with the dollar having been so well bid up in recent years, we see risk for additional dollar declines ahead, particularly against the major currencies, in a world where risk liquidation will be more of a burden to risk-correlated FX. Into Thursday, we've already seen some soft China inflation readings which confirm a continued slowdown in the local economy. Meanwhile, optimism around this week's U.S.-China trade talks has faded, with nothing material coming of the event. Later today, we get a deluge of Fed speak, with the Fed chair included in this wave. We suspect we will hear more of the same from the Fed with respect to its scaled-back sentiment. Over in the UK, the market continues to monitor the state of Brexit, and the pound has since given back some of its recent run after the House of Commons voted by a slim margin of 303 to 296 to restrict Theresa May's tax-bearing powers if Britain leaves the EU without an agreement. In Canada, the BOC was out on Wednesday leaving rates on hold while citing the impact of lower oil, but also expressed the view that the subsequent slowdown in economic activity was expected to be temporary. That's all for now.